What's going on, everybody? Tiger here, back with another weekly watch list for you. So it's been a crazy weekend. We obviously had the Israel-Iran strikes, so that's definitely caused quite a bit of turmoil in the world. Um, in the world of everything, really. Obviously, in the world of between their worlds over there, but also in the trading and investing world. So I do know that oil has spiked like crazy at one point. I think it's kind of come back a little bit, recoup some of those gains. I should say, uh, kind of return to the mean a little bit, but yeah. The geopolitical world's on fire. It's a crazy one right now. So hopefully they get that all squared away at some point. Get some peace going on in this world. That's what we really need, right? So, but listen, in every chaos there's opportunity, right? So if we're looking at the trading world, I mean, yeah, it's I don't know. It's been a crazy one, right? So but if I'm just looking at the currencies right now, I mean, I've had the British pound, the New Zealand dollar, and the Canada dollar. As you can see here on my economic surprise meter, they've been some of the higher percentages. GBP, the British pound is 71%, 83% for Canada dollar, 75% for New Zealand dollar. So what does that mean? So that just basically means if you take an aggregate look of all of the financial reports that have been released of late, your GDP reports, um, CPI, PPI, retail sales, those types of numbers. On average, those have been okay. So the economists predict a number for that report, right? If a number comes out and it's higher than expected, it increases that percentage on those percentages right there. If it's lower than expected, then it obviously goes to the negative side. So yeah, when you're looking at the British pound, the New Zealand dollar, the Canada dollar, the bulk of those reports have been better than expectations. So that, as an aggregate, is good for those currencies. So on the flip side, the Swiss franc is a 40%. So it's less than, I use 50% as kind of the baseline, if you will. But yeah, Swiss franc really is the only low one. It's a 40%. So um, overall, the currencies are doing pretty well. But obviously, what I would want to do is pair the stronger currencies with a weaker currency. So, just looking at that screen right there, I mean, the perfect trade would be the Canada dollar, Swiss franc, long trade right there, right? So we just have to go and take a look at our top setups to see where we're at with that. So Canada Swiss franc, let's go look. Uh, Here it is down here. So Canada Swiss franc, we're getting a rating of a 5, a score of a 5. Now that's just barely on the bullish scale. So obviously, um, if I get a drop into a demand zone somewhere, as long as I'm under value with my master pattern, I'm below fair value, that'd be a good place to go to buy. So just looking at the strong versus the weakest currency just by itself, let's go take a look at that on a chart, CAD Swiss. Where are you at, CAD Swiss? There you are, down here. So this currency pair has been going sideways now for a few weeks, as you can tell over here on the daily chart. I mean, really from about this point here till present price, it's really about the same. So just a lot of sideways movement. Um, that orange box that you see, that's a fair value box um, from the master pattern. So ultimately, what I would want to see to make this look like a decent thing to jump into is I need price to break above that value box. So, if I could get it to do something like this, come up to this level, maybe even break the rest of that red zone. That's a 4 hour demand, a 4 hour supply zone, I should say. But if I could get price to come up to this area somewhere and then retrace and then find a 4 hour demand zone somewhere in that area, then that's where I would want to look to go long to the upside. Because right now it's just a lot of noise. It's highly compressed. So yeah, I don't see any immediate trades. Again, just because it's given me a bullish bias doesn't mean I just want to go out and hit the buy button. you gotta time the trade with the charts. So um, yeah, I mean that's basically it. I mean, yeah, if you're looking at it on the 4 hour time frame, I do have a demand zone over here. Okay, but look in relation to the daily, it's it is below value on the daily, but I want price to be above value on the daily, showing strength to the upside. So yeah, probably won't be buying down here in this demand zone. Just gonna let it alone. I want to see price break all this sideways action. Okay, break, close up in this area, and then come back and just find a 4 hour demand zone somewhere in that area. So not really a trade I'm looking to take right now. So yeah, let's find something else. I know the Canada dollar is the strongest, and the Japanese is a 57%, so just barely above baseline. So in relation to these other strong currencies, it's a little weaker. So Canada Japanese yen, let's go take a look. It's the very top setup. So we got a very bullish bias. And I'm getting a lot of spam calls, so let me close that out. I get a new number one of these days, I swear. Canada Japanese yen. Remember, a 9 or higher is a very bullish. So we got bullish, but very bullish is a 9 or higher. So yeah, top setups really right now is the Canada Japanese yen and the NASDAQ. Now listen, the NASDAQ was the only stock index, that the big banks and institutions actually increased their long percentage. So if we look over here, the big banks did increase their positioning on Swiss franc, the British pound, platinum, which I don't trade, U.S. oil, which is obvious because of the geopolitical tensions going on in the Middle East right now. I don't trade it because I don't have it on my platform, but we're getting a boost in silver and the Canada dollar, which is good for that Canada dollar top setup that I just was looking at. Yeah, so basically the currencies, and then NASDAQ is right here, so it was a 1% increase, so a decent, a small amount. So that's good for the index, of course. But if we go to the opposite and look at this, the big banks sold off on the Nikkei, the Japanese 225. But here in the U.S., they sold off on the small businesses in the Russell 2000, the S&P 500, and the Dow. So look at that, heavy red. Okay, minus 3.79% for the Dow, 5.35 for the S&P, 5.47 for the Russell. So yeah, I may not be looking to buy those indices this week. So, but we do have the one U.S. index again in the NASDAQ that actually saw a slight increase. So if I go and take a look back over here on my top setups page, yeah, Canada, Japanese yen, NASDAQ. I mean, that's really the two strongest. So let's just take a look at those on a chart. Canada, Japanese yen, CAD Jap, there we are. All right. Daily on the right, 4 hour on the, 4 hour on the left. So I got my swing low point here to my swing high point. So I've got my Fibonacci levels drawn up there. Now, like I say, normally when I go to trade something, I like to see price retrace at least 38%. So to that 38% line, preferably the 50 or even between the 50 and the 61. That's kind of a good healthy pullback, which basically would mean a lot of these price points would be more undervalued. So, but it all has to do with the master pattern and where price is in relation to the value. So I do have a demand zone drawn in here just below the 38.2 level. However, it is on a 1 hour time frame, I believe. Yeah, right there. Okay, so here's what we got. So this demand zone here, pretty good volume coming out of that. Yeah, there may be some unfilled orders there. Okay, so yeah, if I can get price to do one of these numbers here, retrace back into that zone, we may look to buy to the upside. Now we do have an overhead supply zone on a daily and on a 4 hour. So you can see over here on the right, let me get rid of my master pattern just for a second. Okay, the daily, you see that? Well, that's actually a green candle. What am I doing? There we go. So see there, we got that last green. green candle up before the strong decline down. So that's my daily supply zone. And then over here on the left side, we got the same zone. Of course, that's yellow for the daily. On the 4-hour, here's my supply zone that's hidden within the daily. So that's a very strong supply zone. Now, if Canada Jap were a bearish sentiment, I'd be short selling right there. But because I'm getting good economics and sentiment, I don't want to sell there. I want to use that supply zone as a potential take profit. So definitely want to keep an eye out on that. So as you can see, price has gotten close to it. Okay, but it hasn't touched it yet. So really, the move here is obviously to get that pullback, like I've drawn out there. Okay, we got very bullish. So the COT report, the big banks, the institutions, they favored the Canada dollar over the Japanese yen. The retail traders they're trying to short this thing. That's why it's giving me a +1 score for retail positioning, because they are net short. They're trying to catch a falling knife to the upside, or catch a rocket, if you will. Okay, so we observe the masses do the opposite. Seasonality good, trend is obviously up. The only report that's went against this pair has been the GDP report. But other than that, we got several neutral reports. But what's really helping this currency pair out is the inflation. So it's been positive inflation reports for the CPI, the PPI, the PCE, which is the personal consumption expenditure report, and then of course the employment change. So yeah, we pair the sentiment with the technicals and the inflation, and that's why the Canada dollar Japanese yen is my top pick for a potential long. So yeah, going back to the chart, we get a 38.2 retracement back into that 1-hour demand zone. I swear, telemarketing, I don't want you. Take me off your list. There. That's how you treat telemarketers. Okay. So yeah, back to my daily demand zone. That's it. So I've got my alert set there. So yeah, we're done with that one. Let's go take a look at the Nasdaq, because remember that was our next highest. Nasdaq with a very bullish score of a 9. So this is the only index I'm going to touch this week if I get a proper pullback into a demand zone. So Nasdaq. All right, here we are. Obviously, we've been on a nice, healthy uptrend ever since the tariff scares. Okay, price is balanced out, and they've just made a mad dash to the upside. It's been a V-shaped recovery. Okay, that's what you call a V-shape. You hear the word V-shape. This is a V right here. Down, up. That's a V, right? that's been that's a strong recovery. That's very strong. But yeah, the most recent swing low to swing high, I've got that Fibonacci around it. If I look at it over here on the right, on my 4-hour chart, I do have a demand zone right here, which I've covered in. I do have another one down here. So could potentially look at taking a stab at this zone if I get price to come down into this zone here. Hopefully catch some unfilled orders for a buy to the long side. Okay. If price breaks all the way through that, stop out for a small loss, then we could look to catch this demand zone for a buy to the long side. So there's really 2 opportunities here on the 4-hour zone. Okay, now I've got obviously my VWAP line from this swing low. It has already bounced. It kind of bounced through it, but it did reverse here, and then it bounced off of it pretty strong right here. So, you know, there may have been a little demand zone even within this area. But I think that was a market open, a weekly open. And I didn't really see a demand zone. And plus it was above this demand zone. That's the one I care about anyway. So yeah, I mean, look, just VWAP by itself pushed price up after hitting that 38.2 level. So, but I'm all about unfilled orders. I like to catch those moves based off of unfilled orders. So supply and demand zones. But yeah, I do. Oh, I actually need to set an alert there. So I'm going to set an alert here on that upper demand zone. I'm going to do that now. And we're going to see how it reacts if and when price does retrace there. Now, because the NASDAQ is so strong economically, it could just continue blowing to the upside. But again, that's just part of trading. You miss out on a lot of trades. So, but I'm all about the pullback. So there we go. So I got my alert set on the proximal line of that demand zone, and we'll see if price reaches it at some point during the week. All right, so that one is done. Euro, Aussie dollar. Yeah, see, these top 6 have all favored, as far as the commitment of traders report, all 6 of these top ones have favored the base currency. So, or the NASDAQ in that case. So let's just take a quick look at the Euro, Aussie dollar, see if we can find anything there. Euro, Aussie dollar, where are you at? There it is. All right, so here we go. Swing low to swing high for my fibs on the daily. Same thing, the 4 hour. Now price has blitzed upwards, and it has touched the fair value line of this daily master pattern box. Okay, so it's currently bounced off of that and now pushing down to the downside. So I do have a demand zone right here. It's about the 75 level. Between the 71 and 88, that's called the kill zone. So that's kind of the last resort buying place, if you will. So, but yeah, got a little bit of a demand zone going on there. Got nice volume coming out of it. I do have an alert set there. So if we can get price to retrace, catch these unfilled orders, and we can look to buy to the long side, just like that. Okay. Euro Japanese yen, that's the next one up on the list. And there it is. And look at this, just a strong uptrend over the last few weeks. Got my 4 hour here on the left. I do have an alert set on this already. This one is one I think I set last week. That was kind of my original projection line, but as you can see, price just kept going up and up and up. So we got to get rid of that now and see what we got. So look at here. So price at one point dropped down into this demand zone last Thursday, it looks like. Thursday afternoon. I would have been, of course, off my computer, so I didn't see it. But look, price bounced, caught those unfilled orders from that demand zone right there and pushed to the upside. So, yeah, now it's trying to form another 4 hour demand zone right here. So it's a little too high on the curve though. So I probably would not want to buy that market right there. Now, let me see here. Yeah, I mean, it pushed 50 pips above it. We had decent volume there. I mean, you could cross your I's and dot your T's and mark a Fibonacci from this swing low to this swing high here. And that would technically be right on the 38.2 level. So you could, and you got this former resistance point right here that actually goes right through. That might be an okay place to take a stab at it. I wouldn't want to put a lot of risk on it, but yeah, we'll just go ahead and mark it just so that it's visible. Okay. We'll just go ahead and plot that demand zone there. But yeah, I mean, maybe take a look at something like this. It's a little bit smaller. Do we have any overhead supply zones? Not really. Looks like it's just kind of going, okay, just in a bunch of noise over here, but not really a strong daily supply zone overhead. Yeah. I mean, yeah, look, here's the thing. It is a 7, so it's giving me a bullish score. I wish that were higher. I wish that were a very bullish, like a 9 or a 10 or higher, because at this point, that might be a pretty decent place just to take a stab at that to the long side there. Now, again, I prefer deeper retracements, but a lot of times these things go straight up when the fundamentals and the sentiment are so strong. So we'll keep an eye on it. But I do have a demand zone set down here, and I think I have that on an hourly, or maybe it's a 2 hourly. Yeah, 2-hour demand zone way down here. Now that's just below the 50% level. So, mm, decisions, 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 decisions. I don't think I want to buy if it's going way down there. Let's do this. I'm gonna move that. I'm gonna move that alert all the way up here to this most recent 4-hour, just to see how price reacts if and when it touches it. It's about a 20 something pip zone, so it's not big. I like bigger ones. I like to have like 40, 50 pip zones. This one is a smaller one, so if and when price comes down, might take a 0.2% risk stab at it for a continuation, because we do on a 2-hour actually have an overhead supply zone, as you see there. So let's do the math on this. We need at least a 2-to-1, preferably a 3-to-1, for this to be a decent trade to take. So if I were to measure that to a would-be stop loss, that's 20. Let's just say, yeah, 20. Let's just say 30 pips. So that means I need at least a 60 pip profit. And if I go to just below that supply zone, okay, that's giving me 88 pips. It says 0.884, but that's 88.4 pips. So we're looking at about a 2.5 to 1. I'm going to go ahead and do this. Here's what I'm going to do. Just so that I don't forget that that zone's up there, I'm going to go ahead and color it in and bring it forward. That way I don't forget about it. Hold on a second. I'm going to go ahead man, I swear. I'm going to bring this forward like this. There we go. Now let's go back to the 2-hour time frame. Okay, so here's what we got. Yeah, so if I can get price to come down, then I would want to potentially exit right there because we are so high up on the curve. But if I can get price to come down, yeah, I'm gonna catch those orders. Was that the 4? Yeah, 4-hour. I'm sorry. So 4-hour demand zone. And then if price comes back up to this point after it catches the unfilled orders, then I'm going to move my stop loss and just kind of trail behind it. So like if I had a stop loss, let's just say I put it right here. Let's just say I made that, of course, red. Let's make it a solid line. Okay, so I got my stop loss. So if price comes down, I initiate the order. And if price continues all the way down, if it hits that red line, then I'm out for a small loss. Okay, it's my line in the sand. But if price bounces like I would expect it to, then here's what I would do. As price made a 1-to-1 risk reward, I would probably just go ahead and move my stop loss to break even or just slightly above, collect my free cup of coffee, if you will. And then as price continues to go higher, I want to move my stop loss and lock in those gains because again, that's an overhead supply zone of a 2-hour on a 2-hour time frame. So it could ping pong back and forth. Okay, unfilled orders to unfilled orders. So I don't want to lose those gains, but I would at least want to make something on this trade. So yeah, Euro Jap, that's what we're looking at. Oh, dang it. I didn't mean to do that. I'm trying to get that supplies. Okay, so here's my potential stop loss right here. All right. Okay, so that's it. That's it for the Euro Jap. Euro Jap. And that's because again, it's just a very strong currency pair. Now, yeah, looking at the dollar or looking at the daily, yeah, it wouldn't surprise me. I mean, it wouldn't surprise me if price were to, just completely retrace all the way back down at least to this level. I mean, that would be another good potential buy point. So look, sometimes you buy too high, but again, you just take a small loss and you get in at a better price further down, because if you get down at that that better price, then that the risk reward just increases. So you should obviously be able to make up your loss that you had on the first one, more than make up for it, and then start to obviously get, actually profit on that trade. So yeah, we'll take a first stab at that if it hits. So I got my alert set there. Yeah, and basically all these other Japanese pairs are going to be similar. I've got alerts set on all of them. I do want to go ahead and take a look at short selling. So look, I don't think since I've had this channel, I haven't really done a short sell in a while, but I did see one for the US dollar Canada dollar. Right here, -6. So remember, -5 or less is a bearish sentiment. US dollar, Canada dollar. So obviously, yeah, you see a bunch of red, right? You see 2 blues and that's it. But other than that, you got a lot of neutral and you got a lot of red. So that's giving me a -6. So dollar, Canada dollar. Let's see here. Wanted to go to my surprise meter. Again, the Canada dollar is giving me an 83%. The US dollar is neutral. It's a 50%. So Canada is clearly the stronger currency between the two because of recent aggregate collection of the economic reports. So that would mean we'd want to sell the dollar and buy the Canada dollar. So we would want to short sell the USD Canada dollar. So let's go find that currency pair. Right here. Now look at this. Look at this. So everything we've been looking at really over the last several weeks has been to the upside. This one's to the downside. Okay, this is a downtrend. Pretty strong downtrend, isn't it? Like, it doesn't take a genius to see that. You can see that's clearly a strong downtrend. So look, when we short sell, it's the exact same way as buy and long. We're just flipping everything. We're just doing everything in reverse order. So what I want to do is borrow the lots, if you will, up here, and then promise to buy them back at a lower price. That's how you profit in a down market. You borrow the lots up here and you buy them when price reaches, you buy them at some point, but the goal is to buy them back when it's at a lower price. If price goes against you, you're just buying them at a higher price. So you're still having a small loss, just like if you were to buy. Okay, so I do have a supply zone. Yeah, that's the big difference with short selling. Rather than buying in demand and selling into the supply, we're just doing the opposite. We're short selling in the supply zone and buying in demand at a lower price. So I've already got this zone mapped out up here on a 4-hour. Now it is in a daily supply zone that has already been touched, but it is still, and it was a strong supply zone too, because price at one point touched it and obviously dropped further to the downside. So for me, I'm going to use that 4-hour zone that was within that original daily supply zone. So remember, 4-hour zone inside of a daily zone, I love it. Perfect place to buy or sell something. So that's why I've got that alert set there. I would like to see price do one of these numbers. I want to see price retrace up, catch those unfilled orders so I can short sell down, just like that. Now I do have some other zones that are in this area, as you can tell, that are mapping out. I just prefer that zone up here because, again, it's within that daily zone. Now it is mitigated, but it is still a daily zone. So yeah, that's basically what I'd be looking to do on the dollar Canada dollar. Retrace, hit my supply zone, short sell it. I think, yeah, we got quite a few others. I mean, I do have, if I go show you my alerts, I've already kind of done this in advance. NASDAQ, obviously, we just went through that. These are all my alerts I've got set. The dollar, Canada dollar, which we just went over. Aussie, Canada dollar. So this is another short sell. Oh, look at this. It's actually getting close. Aussie Canada dollar, as you can see, was a -10. This is the strongest bearish currency pair I have, Aussie dollar, Canada dollar. So buying the Canada dollar by selling the Aussie dollar. So let's take a look at that. Look at this. It's getting close. Might actually pull the trigger on this. So if we look over here on the right side on the daily, it's obviously been in a downtrend since the middle of May. It's been very choppy, but it has been down overall, just kind of a slow grind down. If we look at our 4-hour over here on the left, we got our swing high point, our swing low point, and just above the 50%, we have a supply zone, albeit it is on a 2-hour time frame right there. Okay, that's a green candle. It's just because I got my order block tool turned on, that's why it looks like it's red, but it's actually green. Okay, in fact, I'll just show you real quick. See, green. So that's my last up candle before that very strong downtrend, downward move with good volume, as you can see on the yellow bar down below it. So yeah, we might be getting into a trade here shortly. I mean, if I take another look over here on the daily, you can see my alert right here. Okay, that dash line on both sides, really. Let me see here. One candle, two, 1, 2, 3, 4, 5. I mean, that's technically 5 candles in that. If we include these other candles here, that's 5 candles. So that's just barely in my comfort level of using that as a zone, meaning price. Because ultimately, I want price on whatever time frame I'm looking at. I only want price to be there, ideally, 1 to 3 candles. 4 to 6 is okay. So, well, I should say not as strong. Anything 6 or higher is no good. That's just too much time spent there, which means theoretically it takes away all of or most of those unfilled orders. So again, I'm looking at this on a 2-hour zone, a 2-hour time frame. I do have 5 basing candles before that big drop. So it's just barely within my wheelhouse. Now, obviously, if I take a look at that same area on a 4-hour, even though it's not a 4-hour supply zone, a perfect layout, that does have 1 candle, 2 candles. Okay. So it would definitely work if I had that 4-hour zone there, and it would be a strong one. But because I'm on a 2-hour, it's just barely been in that zone short enough for me to consider using it. So that's why I ultimately put that on there. But anyway, yeah, sorry to confuse you with that. We may have an alert get hit here, and if it does, obviously I'll take that trade. So yeah, it's not far. It's not far at all. It's about 5 pips away. So I like it because it is the strongest, very bearish biased instrument I got. Yeah, we'll take a stab at that. We'll look to take a stab at that. So I'm just going to go ahead and prepare it. Aussie dollar, Canada. Oh, wait, one other thing I wanted to look at was okay, so ATR, that's average true range. I am getting a 64 pip daily range. I prefer to trade currency pairs that move 100 pips or more, but comfortably 80 or more. This one's only a 64, meaning it just moves a little slower, a little more like molasses. I like currency pairs that have volatility, that move ultimately. So if I place this trade rather than a 0.5% risk, well, that really doesn't matter. Well, it is only here's the thing, it is only about a 15 pip zone. So yeah, I'll drop my risk down from 0.5% down to 0.2% of my account. Okay, for 2 reasons. It's the ATR is not very much, not as high as I want it to be, but also it's kind of a tiny zone. Again, it's only about a 15 pip zone from the proximal line to the distal line of that zone. So basically, it's just trying to pinpoint this thing, right? It's not like I have a big zone to where I can place a trade and have a lot of wiggle room. So yeah, essentially, if I were to place this trade, I mean, ideally, the stop loss goes a few pips above the distal line of the supply zone. But yeah, I mean, I could probably look to go above this little swing high point here, something like that. But we'll see. We'll see. I might take a small stab at it, but again, it would only be a 0.2% risk on it. British pound, Canada dollar. This one is a bullish one as well. Go back to my 4-hour zone. I do have this demand zone down here. Price pushed above this swing point, and this swing point when we incorporate that wick right there. Zone. So price is above this daily master pattern box. So I like that. Yeah, we got this zone. So I got that alert set there. We'll see how price reacts when it gets there. Now, euro dollar. Now, this is a trade I got into on Friday, and I closed it at the end of the day because of all this geopolitical tension. I just didn't feel very comfortable about leaving it open. But here's why I got into that trade in the morning time on Friday, because I did have this swing low, this swing high. Price had hit a daily supply zone way back here. Okay. Right here. So price had bounced into that supply zone and started to come down. And here it is again on the 4-hour. And when it did, though, it hit my 50% retracement, but it also hit this 4-hour demand zone. This 4-hour demand zone also had a former resistance point over here to the left going right straight through that. Resistance often becomes support. So I decided to get into that trade. Oh, and by the way, it hit off of this VWAP line coming from that swing low. So it was a very good entry. It was a very good entry. I got into it, but again, I closed it out, as you can see. At the end of the day, I did have a small win. It wasn't that much. But as you can see yesterday on Sunday, when price opened, it gapped a little lower, but then it closed that gap and it's continued in the direction of what would have been a pretty solid trade for me had I stayed in. But listen, it's just a big game of chance when you're leaving a trade open over the weekend, especially when there's geopolitical tensions running rampant in places. I mean, obviously the Middle East is a little bit crazy right now. Iran and Israel, okay, exchanging blows. So I just closed out of it. I wished I would have stayed. I mean, no, you know what? I didn't break my rules. I obeyed my rules. So yeah, it's technically a loss because I missed out on the profit, but look, I stayed safe. And part of surviving and trading is staying safe, not doing anything too crazy. So yeah, it would have been a pretty good trade, and I would have probably had my stop loss moved up. I'd have had it in profits, a little better profits than that. So is what it is. Is what it is. So that's pretty much it. Yeah, I think that's it. Canada, Jap, NASDAQ, really any of the Japanese pairs, I'd be looking to sell and buy that base currency. Short sell the Aussie CAD, short sell the US dollar. I got all those alerts set. It's a beautiful day in the neighborhood. Beautiful day for a neighbor. Could you be mine? Won't you be my neighbor? My name is Tiger, and I approve this message.